we've got a question from microphone number 1, but just to give you some feedback and to pick up on Ms Richardson's question, I do have a number of questions that have been pre-submitted in relation to item number 1. I have some in relation to later items, which I'll read out at that time. But after the next question, I might just feel free still to come forward, but I will take some time to read out some of the questions received in advance. Microphone number 1.
Chair, I have Mr Craig Caulfield, shareholder.
Welcome back, Mr Caulfield, and thank you very much for bearing with me to circulate the questions, but we're going to keep coming back to you.
Thanks very much. I appreciate that, Mr O'Malley. Rising interest rates are sort of on everyone's mind at the moment. Inflationary pressures we're all feeling. Oh, by the way, congratulations to the Chief Economist and the team at the Commonwealth Bank. If I'm correct, of the 4 major banks, your team correctly picked 0.25% rate rise rather than a 0.5% rate rise.
I might just interject and say our Chief Economist is here, and that was correct, and we were very impressed with his forecast. We're now holding him to account to be perfect in future as well.
He may receive offers from other banks, but anyway, let's keep it quiet in the room. So Reserve Bank Governor Philip Lowe placed approximately $200 billion of emergency level funding at around 0.1% to the banks for the purpose of on-forwarding to homeowners and businesses and support the economy through, the disaster of COVID. Much of that was at fixed rates that might have been around about 2%, a little over 2%, 2.2, etc. And a lot of that was at 2 or 3 year fixed terms. This might have started perhaps 2 years ago. We're facing into a very worrying prospect right now where fixed rates are ending. I had a friend in where I live just talked to me last week and said, I've just got to look at my loan, and I'm shocked at the new variable rate, which might be 5-point-something% coming off a fixed rate. So that's, perhaps 100 or 150% increase in the interest rate component. A lot of people weren't expecting this. I recall the Governor Philip Lowe talking about interest rates not rising until 2024 and giving us some feeling of comfort that there would be a period we might renegotiate those fixed loans. But that's not happening. And he's acknowledged that now, of course, himself too. We've had 5 consecutive rate rises, but there's thousands and thousands of Australians, bank home loan customers, CBA is the largest with 40% market share, that is facing into this right now, and obviously you're aware and cognizant of this. 2 questions. How will CBA provide care, courage, commitment and access when a customer is in hardship? Might be financial hardship or emotional distress. And I'm aware that when I was in that situation of hardship and distress, CBA took legal proceedings to repossess our home and farm. And we saved it because we fought the bank. We fought you guys that hard. But it was incredibly distressing. But that question is, what will you do for the other people that are now facing into that now?
Thank you, Mr Caulfield. And there's a lot to your question. On the last point, I won't comment on the specific circumstances. I know you've had many conversations with members of the bank, including Matt. So I'll park that, but acknowledge that concern. If I may come to interest rates, it's incredibly difficult in a rising interest rate environment, which we have not seen in Australia for many, many years. In context of the care, courage and commitment, I think the pandemic demonstrated how the bank can absolutely engage with customers, support customers, and not require repayments in any form for an extended period of time during the pandemic. That was supported by regulators who adjusted regulatory settings to facilitate that. It was supported by the Reserve Bank that provided funding at a lower rate at a time when we weren't receiving any funding from our customers in the form of interest payments. I think what was very important during the pandemic is everyone worked together to effectively help Australians get to the other side of the pandemic. And it was a really special time, not so much if you lived in Melbourne like many of us do, but it was a special time to actually work together. As we move into increasing times of interest rates, and Matt will talk to the specifics, our strategy of leading in the transition, I've talked about it in relation to the pandemic. I've talked about it in relation to climate change. It equally is a focus of at a time of rising interest rates. We again have to be cognizant that many customers will find it incredibly challenging, particularly as you said, they roll off fixed rate loans into variable rate loans. There's a whole lot of processes we follow before we even provide a loan to mitigate that. But the lesson that was reinforced to us during the pandemic was proactive engagement with customers, and that proactive engagement is occurring today. Having multiple engagements directly if possible, prompted through the app if necessary, but making sure that people are aware that rolling off a fixed rate loan sometime over the next 12 months time will see a step up in interest rates. Your question really highlights that is a risk that we need to bring to people's attention. It is one of the questions that was sent in advance, which is almost word for word in some respects what you've just asked. But we've got to get that right, and it's important that we do. In terms of the specifics around the TFF and other strategies that we undertake, I'll get Matt to add to that if I may.
Yeah, no, thank you. Nice to see you again, Mr. Caulfield.
You too, Mr. Coleman.
Perhaps just to look a couple of things. Particularly, perhaps to reassure others that a lot has changed in banking over more than a decade, and just to sort of, I think for clarity, to reference the issues that you had sort of predated certain current times, and as you said, we had the opportunity to engage and discuss that matter, which I won't go into any detail. But I guess I say that on behalf of the Commonwealth Bank and across the banking industry, there's been an enormous amount of focus on how to best support customers during challenging times, and I think positively that was well demonstrated during COVID. But of course, there will be future periods of economic difficulty, and heavens knows what other challenges may occur. I mean, specifically to your point, you're quite right. The cash rate has risen quite sharply in recent months, and our economics team are forecasting, we believe reliably, another 25 basis points next month. And then we think that rates will be on hold from there, but there are many others who believe rates will continue to go higher than that. It's a very important focus and priority for us and Angus, who runs the retail bank in particular, to be engaging proactively with customers well in advance of their fixed rate maturity so they can best prepare for that. As we sit here today, the overall portfolio and the economy is very strong, and hence the reason why they're continuing to lift the cash rate. We are at sort of beyond full employment, but absolutely recognise the concern and anxiety for many customers with rising cost of living, with interest rates. We've spoken a lot about energy, and there's been a lot of coverage on energy prices and the forecast increases over the next 12 or 18 months. So I think, as your question demonstrates, we think it's a very important period to support customers. We're very confident about the overall outlook for the Australian economy, but recognise that every individual customer's circumstances are different, and we need to take that into account, and we're absolutely committed to doing so.
Thank you. It's more. I'm not downloading my case here. I respect that, but knowing my case, it's that emotional time that people are going through. So financial is part of it, but it's emotional support. I would like to hear that the bank has thought about the emotional impacts on people, and yes, you'll be stepping up, financially, and you during COVID you showed that. But what things are you, have you got strategies now that are in place ready for these people coming forward, so that, I remember myself, I couldn't make a phone call, I couldn't take a call. So that might be the bank calling someone to say we're here to help. You might be legitimately reaching out. So, consider these things. Well, we need to send an email, or we need to send a letter. How we describe the letter. What's the tone of this letter? I know I received letters and it was like, throw that away. Other letters, it was like, okay, they might be here to help. So I want you to be all cognizant of that, to really think about that interface and how it comes across. I know it's much better now than it was years ago, and we've all been through learning journeys, but I want to safeguard those people in the future that are going to face into that don't even know it now.
No, thank you. I think it's a very fair comment, and it's a concern that looms large for us. We recognise, and we see it, a number of us spend time and various operational areas of the organisation, speaking to customers. And when in financial difficulty, that can be a very, very stressful set of circumstances, and it's often accompanied by other events. It could be loss of employment, it could be illness of a loved one. It's a very challenging time. Not all of our customers will be in that situation. Many are in a very strong position, and so we do have a number of different options for the way we'll communicate with customers. But I think, as your question is focusing on, some will need more support than others, and as Australia's largest financial institution, we think it's critical that we're able to provide that support as best we can.
And Mr. Caulfield, if I could just add to that, you have today here physically in front of you the entire board and management team, and your message about looking after the health and well-being of our customers is being heard loud and clear. It's equally important, and this is where we do get significant focus all of the time to reinforce your message, is to look after the health and safety and well-being of our employees, because our employees have to make those calls, have to receive those calls. We have to support our employees because they find it equally difficult, and we have to support our employees to support our customers. It's a really difficult and challenging area, and it's one that in the People and Remuneration Committee, on the people side, we're looking at all of the time. So I'd like to thank you for calling that out, because it's fundamentally important for us to look after our customers and our employees, because it is that engagement between the two that creates a better outcome for all. So thank you for that.
Yeah, thank you, Mr. O'Malley. The second question with this is much, much shorter. Would you be prepared to meet with us? I represent some bank victim groups, as you've said to several other people that you would meet with them.
I'm going to have a very busy calendar, Mr. Caulfield. So I, as an incoming chair, I think I would very much like to meet, and I'm not going to commit to meeting with everyone, but I'm doing that today. So keep asking and I'll see what I can do. But Mr. Caulfield, I'd be very happy to meet with a group that you're representing, because that would be part of my induction as a chair, and I would be happy to do that.
Yeah, thanks very much.
Thank you.